The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Squawk Box Europe with Juliana Tautelbaum, assisted by myself, Steve Sedgwick. These are your headlines. Tesla shares slip in extended trade after missing earnings forecasts amid higher costs, whilst the CEO Elon Musk defends his proposed $1 trillion pay packet.
I just don't feel comfortable building a robot army here and then being ousted because of some asinine recommendations from ISS and Glass Lewis who have no friggin' clue. I mean, those guys are corporate terrorists.
And on the earnings front in Europe, Kering posts a minor improvement in like-for-like sales, while SAP revenue falls short of expectations. We'll be hearing from the SAP CEO, Christian Klein, this morning on Squawk Box Europe. And U.S. President Donald Trump hits Russia's two biggest oil firms with new sanctions, in a move he hopes will bring Moscow to the negotiating table. The EU's Kaja Kallas giving CNBC her reaction.
This is a good signal of strength that U.S. is putting sanctions on those big Russian oil companies. It is really depriving Russia of the means to fund this war.
Good morning, how are you?
I think a little bit better than you, sadly.
Oh, no, I'm brilliant. He said, no, I'm good. Thank you very much indeed.
It's good to have you back in the seat.
You say that after 3 hours, you know me. Look, lots of things to talk about as well as asinine comments. I mean, God knows I've said enough asinine comments in my life, but really is it asinine to say I don't think a CEO should have $1 trillion pay packet? We'll come to that in a few moments' time. But first of all, we'll take a look at Unilever numbers as well. It's very interesting looking at the defensive side of the market because let's be brutally honest about it, and you can come in here. They haven't really been acting defensively, this sector as well. When you look at where Unilever shares have done year to date, it's okay, 2.3%. They're giving you a 3.3% yield, but it's not as compelling, perhaps, a defensive play as some people would like to hope it is. Anyway, the numbers themselves and news of the ice cream demerger, which we seem to have been talking about forever. Anyway, the full year outlook has been reconfirmed. Adjusted third quarter sales growth 3.9%. Total sales in the third quarter 14.8 billion euros. In the third quarter trading statement. I'll just give you a little bit more here. We now anticipate lower restructuring costs of around 1.2%. They're talking, of course, about the dividend, which I just mentioned, which is only 3.28%, which when you consider risk-free money, you can put on, dare I say it, short-term gilt, short-term paper across the continent, and you're going to get that at least as well. You kind of want a bit more bang for the buck from these players as well, certainly some form of growth in share price, which you just haven't had. They anticipate Unilever will pay its quarterly dividend for the fourth quarter in full. I thought, that was a given. Anyway, the demerger, expected to be complete in the fourth quarter of 2025. That is, it says here cream, but it means ice cream. And I think that's really kind of what you need. So restructuring costs lower, demerger of ice cream on track, and numbers look pretty much in line.
And just a little bit more detail on the numbers. I think for a company like Unilever, it's all about the price volume mix. Underlying sales growth in the third quarter, 3.9%, 1.5% from volume, 2.4% from price. So you've got both contributing here, which I think is encouraging, but still, fairly muted when you look at the overall underlying growth figure.
Yeah, it's an interesting company. It hasn't had the travails. It's had its travails, of course, with the owners of Ben & Jerry's, who are kind of, pretty fed up with it, to be honest. But it's had its travails. Less so than Nestle, which was the benchmark of the sector. But very interesting, after the recent price move on Nestle, it actually trades at a tiny premium to Unilever now. They both trade at 17, 18 times forward as well. But Nestle, which of course lost its CEO because of his indiscretions, and has a new CEO, Mr. Navratil, Philippe Navratil as well, they had a big blip up on their most recent numbers where, as Caro was reporting out of Switzerland, they did hit better than expected numbers as well. Right, should we move on to asinine? Do you know what a definition of asinine, by the way? Okay, it is extremely stupid or foolish. Is it really extremely stupid or foolish as a shareholder governance group to say, I don't think you should necessarily have $1 trillion pay packet. Well, anyway, that's pretty much, short read anyway, but that's pretty much what Mr. Musk is saying about the shareholder groups.
He had a lot to say about it.
He had a lot to say, didn't
interrupting the shareholder call at the end. I won't spoil too much because we're going to talk a lot more about it throughout the show. Well, yeah, Steve already took that job. But let me flesh out for you the numbers. Tesla missed earnings expectations in the third quarter.
He called them corporate terrorists.
So much for not spoiling the punchline here. Profit fell by 29% on the year, and its operating margin almost halved, even as the EV maker delivered record car sales, beating revenue expectations with buyers rushing to complete purchases before the expiry of key U.S. tax credits. CEO Elon Musk looked to strike a bullish tone on the earnings call, saying he's confident Tesla's technology will change the nature of transport.
We're at a critical inflection point for Tesla and our strategy going forward as we bring AI into the real world. I think it's important to emphasize that Tesla really is the leader in real-world AI. No one can do what we can do with real-world AI. I have pretty good insight into AI in general. I think that Tesla has the highest intelligence density of any AI out there in the car, and that is only going to get better.
Spoiler alert, Elon Musk did have something to say about that pay package. Tesla's results come as shareholders are preparing to vote on it. A package that could see Musk earn almost $1 trillion. On the call, Musk hit out at advisory firms that have called for shareholders to reject the proposal.
But I just don't feel comfortable building a robot army here and then being ousted because of some asinine recommendations from ISS and Glass Lewis who have no friggin' clue. I mean, those guys are corporate terrorists. And the problem, so let me explain the core problem here is that so many of the index funds, the passive funds, vote along the lines of whatever Glass Lewis and ISS recommend.
Well, it wouldn't be a Tesla earnings call without Elon Musk. A little bit of feistiness from the CEO. Arjun, you and I spoke to Steve Wesley, former Tesla board member, about this very issue around Musk's pay package yesterday. He made the point that the hurdles are incredibly steep for him to actually get this payout. So really, you can get behind it, given the hurdles are incredibly high. If you get to a situation where he's earning $1 trillion, it's because the stock price has rallied so much. What are the chances that this actually passes come November 6th when the shareholder meeting happens, and how important is it actually to Tesla investors?
Yeah, the way Elon Musk is framing this is not about the money. I mean, he's a billionaire. Does he need any more? Who knows? But it's more about his view that he believes if Tesla and also XAI are going to build this very strong and powerful AI in the form of robotics. He spoke a lot about these Optimus robots and said they're walking around their headquarters in Palo Alto. But his view is that if they're building incredibly strong AI, that he believes he needs to have some level of influence over the direction of that, rather than him being in a position where he could be outed, for example, and other people take over this AI that he's helped to build. So that's basically his philosophy around the pay package, because as part of the pay package, it is about increasing voting control. So as well as the actual compensation, for Elon Musk, it's a philosophical point of view here in terms of where he believes he should be going. Will it pass? I mean, there is obviously opposition. We've heard from ISS, we've heard from Glass Lewis, urging shareholders to perhaps reject this, but there are a number who believe that Musk should be paid this because they believe he's the person who should be in charge of Tesla to move it in to the next era.
Why should he be allowed to run the same kind of activities outside of Tesla as inside of Tesla? He's got his other operations, which are also, I presume, moving aggressively ahead, including XAI, on their own AI operations. Why doesn't he then agree to cede any kind of AI development on those projects and just concentrate on the AI developments within Tesla if he's to get this pay packet? Because it seems to me he's hedging his bets left, right and center. I may actually put all my AI activities into XAI. I may put it into other ventures as well. It's like, okay, fine. Even if you get this money, surely you should actually just say, that's it, I'm focusing on Tesla. I don't have 8 other jobs going on at the same time.
Yeah, I mean, one of the things Elon Musk has been clear wanting to do is create some sort of combination or between XAI and Tesla. There have been pushback against that. I mean, look, he's a very special character, and there's a lot of people who back Elon Musk and back Tesla precisely because of his ability to kind of have fingers in lots of different pies, whether it's SpaceX, whether it's XAI, and what's been being built at Tesla. They see kind of those endeavors, partly separate, but also partly when it comes to things like XAI and the potential with Tesla, where those two kind of entities could combine and see synergies, I guess, in the future. There are others who have said, look, he's just doing too many things. He needs to focus on Tesla. And a lot of it, we know that the investor base of Tesla can be quite heavy retail, can be quite heavy favoring Musk and his vision. And there are a lot of people who are investing in Tesla because they back Musk and because they back the way he...
Let's break down one other thing. It's a car company still, yeah? I know we're promising ubiquitous robot rollout throughout the world and the AI and the batteries and I get all that. That's there. But actually, once you take out these credits, which everyone rushed to obviously buy their Teslas and other EVs before the end of September when the credits expired as well. Actually, the margins on selling cars, it looks distinctly ordinary.
Yep.
On selling cars, it's distinctly ordinary with a 5.8% operating margin on selling cars. That's middle of the pack stuff. That is nowhere near the kind of high double-digit levels that he was in his heyday, in his halcyon years a couple of years ago. So actually, let's be brutally honest about it. In a developed market where there is solid competition, Teslas are not knocking the ball out of the park, and they are not doing anything extraordinary on the profit front for shareholders. Shareholders who are backing this company to the tune of 221 times forward PE, which is roughly 400 times what your average car maker is in the United States.
Yeah, I couldn't agree more, Steve. Look, what we got yesterday was another classic Musk call, light on detail, big on future promise. And the problem is when you actually do strip back a lot of the promise around robotics, around robo-taxis, even full self-driving, which is, if you were to say anything was near-term autonomy, full self-driving, this is the assisted driver system Tesla markets as FSD. Even that, I think, on the call, they suggested only around 12% of the current fleet of Tesla owners have bought this software package.
Remind me and Giuliano one more thing. We've got to move on, but just remind us one more thing. Is anything he's doing on the autonomous driving better, in your opinion, you're our tech expert, better than what the best rivals are doing out there?
There was a point where Tesla was ahead, but it's clear now that
you're seeing
companies like Waymo, you're seeing the Chinese, specifically in China here at this point, because bringing that outside is hard, and likewise it's hard for Tesla to bring its autonomous services to China. It hopes to launch those, but clearly you are seeing strong efforts from the Chinese. When it comes to the robo-taxi portion, you're seeing companies like Waymo and Uber partnering with other driverless car companies to really challenge, I guess, what Tesla's doing. And already, if you think about robo-taxis and where Tesla's rolling this out, Waymo already has a bigger footprint.
Wow, that's extraordinary. Thank you very much indeed for that. Lovely. Moving on, globalization had worked for the past few decades, but international companies must now become more regional and agile to adapt in this new fragmented environment. Really interesting conversation I had about the technological fragmentation that's going on as well, which is seen by many as a bad thing. But actually, for Olivier Blum, who's the CEO of Schneider Electric, he says companies have no choice but to return to a regional framework if they want to stay in businesses. Well, I caught up with the Schneider Electric CEO on the sidelines of the Innovation Summit in Copenhagen and asked him about the company's exposure to AI.
We have 20% of our revenues in data center. We want to make sure we pay as much attention on how we are growing that part of the business and the rest of the business. Because the opportunity we have in front of us in building, in industry and infrastructure are massive. So I'm just trying at my level and with my management team to make sure that we spend equal amount of time on growing data center, do great job with NVIDIA, developing the next technology that we need, but keep growing in other segments to make sure we stay very, very balanced in our exposure at the end of the day.
And yet, when the DeepSeek hiccup happened earlier in the year and everyone suddenly thought, we're not going to need all these hyperscalers, we're not going to need all this capacity as well, Schneider was caught up in that as well. Do you believe that your partners in the financial community and the market more generally appreciates that Schneider isn't just about AI for its growth story?
I don't know, but I'm trying hard to explain that we are very balanced. And you just look at the revenue of Schneider. You take the segment in which we are exposed, the geographies in which we are exposed. You mentioned North America, China. You know that India is the third largest country of Schneider Electric now. We are working now in the Middle East. Business model, you take from product to systems, services, and software, I think we are showing to our investor that we are probably one of the most balanced company when it comes to exposure on those three dimensions. So I think it gives a lot of confidence that in case there will be slowdown in part of the market, we can continue to keep growing and return really.
Coming up on the show, earnings are top of mind, and we're all over it. From Kering to Tesla and SAP, we'll break it down. Plus, European leaders are arriving in Brussels with defense and Ukraine high on the agenda. Sylvia is live on the ground. And Nokia's Q3 earnings top expectations this morning amid a sharp rise in demand from AI and cloud customers. We speak to the new CEO, Justin Hotard, about his plans for the company at 8 a.m. BST. Welcome back to the program. Crude prices are sharply higher after the U.S. imposed sanctions. Let's take a look. Put them on your screens here.
Are they
3-4% relative to what they've done recently.
Bingo. That's the point, isn't it?
So
you better do the read. I've interrupted again. Are you please have me back?
We'll see. Give me another couple hours. Russian oil firms, including Lukoil and Rosneft, accusing the country of a lack of commitment to ending the war in Ukraine. Now, this after talks between America and Russia over a proposed meeting between their respective presidents fell apart, with Donald Trump telling reporters the meeting didn't feel right to him. Trump and NATO Secretary General Mark Rutte walked reporters through the sanctions.
These are tremendous sanctions. These are very big. Those are against their two big oil companies, and we hope that they won't be on for long. We hope that the war will be settled. We just answered having to do with the various forms of missiles and everything else that we're looking at, but we don't think that's going to be necessary. We would like to see them just take the line that has been formed over quite a long period of time and go and let's go home.
What the president is doing today with these sanctions is putting more pressure, of course, on both parties, in this case on Russia. It's all about changing the calculus, making sure that Putin understands that the president's vision this weekend of having a ceasefire, stop where they are, as you literally said, that this has to be step one now. And for him to really accept that vision and to come to the table. And then you have to put pressure, and this is exactly what he did today.
Let me just quantify it. If I'd have said to you, I'm taking out arguably the second or third biggest oil producer in the world from world markets, and we're only at $65. Now, we're not necessarily taking them out from world markets. A lot of people are still carrying and using their product as well. And of course, the Indians are under a lot of pressure to not use the product. The Chinese are under a lot of pressure as well. But if I said, we were going to take out the couple of the biggest oil companies on the planet, including Igor Sechin's Rosneft and Lukoil and what have you, and we're only going to be $64.50. I mean, come on, that is an amazing ability for the market to absorb huge export losses from Russia potentially.
I think it just speaks to the supply glut that's out there.
It's exactly. Don't get me. I'm not denying that it's had a big blip off its lows. I mean, but we're still only at $60 on WTI.
Still super contained. Just one thing to add that I was just reading a moment ago, that President Trump, he is poised to meet with President Xi next week. Obviously a little bit of back and forth about whether that goes along, but apparently President Trump intends to raise the issue of China's Russian oil purchases with Xi, something that he has been reticent to really go hard on. He's obviously targeted India previously, but it will be fascinating to see if he actually addresses it with Xi directly.
The Europeans are also moving on something that's been a bugbear of mine, which is LNG, I understand.
That's right. We've got to news just crossing the wires now that the EU has formally adopted a 19th package of sanctions against Russia. The Danish presidency of the EU saying that the latest sanctions package will introduce new and comprehensive measures on oil and gas. Now, specifically, a ban on imports of liquefied natural gas. Now, a little bit of detail on how this is going to work. The 19th package of sanctions against Russia, it's going to be a phased LNG import ban with 6 months for short-term contracts and from Jan 1, 2027 for long-term contracts. And this is something that you raised, Steve, when I said, this seems like big news, a ban on LNG. This has been President Trump's whole sticking point. The EU needs to stop importing Russian gas if they want Trump to take a harder stance. And they're sort of doing it, but with a pretty big lead
mealy
time.
mouth. Let's be brutally honest about it. And dare I say it, Pedro Sanchez and others say, oh no, we've got these long-term contracts. We can't do anything about it. Break the contract. This is the Russians who have invaded a sovereign nation as well. Anyway, let's get to Sylvia, who joins us live from Brussels. I loved your interview earlier on. We're going to play some of it now as well. But give us your reaction to the 19th package of sanctions, Sylvia.
Well, and I love the debate that both of you were having in the studio. Indeed, what we are witnessing today is European leaders coming to Brussels and ultimately looking at new measures to support Ukraine. But we can't ignore the announcement stateside because it is significant, the announcement that the US is going to put sanctions on Rosneft and Lukoil. And the expectation is that could also provide more momentum and more support for European leaders to go ahead with their actions against Russia. It's no surprise. Ultimately, we were expecting the 19th package of sanctions to be approved today. We're getting that confirmation now. But ultimately, it's about what the EU is going to do next. Nonetheless, when I spoke to the High Representative for the EU, Kaja Kallas, she did say that the announcement stateside is showing strength from the United States. It is no doubt a welcome decision from the majority of the European leaders too. But let's see how far the leaders will go here. The key question mark at this stage is whether they will give a mandate to the European Commission to do more with the frozen Russian assets that are on this continent. The idea is to gather about 140 billion euros in reparation loans for Ukraine. And Kaja Kallas explained to me that the moment that they get this mandate from the European leaders to do so, they just have to act really fast. Listen in.
If we get the mandate, then we need to move really fast because Ukraine really has the need to defend itself and has the need for the proceeds from those assets and also the funds from those assets so that they can really defend themselves. We see Russia is escalating the attacks on civilians and civilian infrastructure. By the way, since the start of the war, 93% of the Russian targets have been civilian. So this is really in order to cause pain before the winter is coming, attacking energy infrastructure. So it's clear that they need this now and they need this fast. So we need to be fast on our side as well.
So I'll give you a little bit of color and insight into the summit, guys. I know you enjoy that as much as I do. So we don't know exactly what they're going to say when it comes to using Russian frozen assets. We'll be keeping a close eye on that part of the conversation. However, listen to this. The conclusions around Ukraine are only going to be signed by 26 leaders of the EU, not 27. I guess you can guess who the prime minister is that will be missing in that part of the conversation. In fact, Viktor Orban, the prime minister of Hungary, is only joining this EU summit in the afternoon. He's arguing that he needs to stay home for a public holiday celebration. But ultimately, from a practical point of view, it means that he will be missing the conversations on Ukraine and will also be missing an encounter with the president of Ukraine, Volodymyr Zelensky, who will be joining this summit in the morning. So I'll have more detail on that for you tomorrow once we see how these dynamics play throughout the day.
I love you in your happy place. It is a lovely thing. I've never known anyone love Brussels as much as you. Thank you for your brilliant coverage, as ever. Look at her. She's just gleeful in Brussels. I can't stand Brussels. Well, anyway, she loves it. Swedbank posted a net profit beat in the third quarter, coming in at 1 billion Swedish krona, above expectations and more than 8.5 billion, at more than 8.5 billion. The headline figure was down on the year. The Swedish banking group says the country's economy remains weak, but is showing some signs of improvement. Jens Henriksson is the CEO of Swedbank. Jens, I'm sorry we took a while getting to all this news about Russia and what have you. Look, lovely to see you again. I'm constantly on the phone to friends on both sides of the country, from Göteborg to Stockholm as well. And they say the same thing as I just read there as well. We think there are signs of improvement, but we're not quite sure. But how are you seeing it, sir?
Well, I think that was a good summary. First, welcome to Sweden. Maybe not as nice as Brussels in this gloomy end of October. But if you look at the economy in Sweden, it's easy. It is still muted, and people and companies are acting a bit in that way. But when we look ahead, we are optimistic. We think that the country will grow by 2% next year, and we see that the growth in Estonia, Latvia, and Lithuania will be higher. Remember, we have 4 home markets, and these home markets have strong public finances, good working climate, and strong companies. And that means that today I presented a strong result for Swedbank, which was very good.
Yeah, that is great, Jens, as well. But I'm just wondering what the next catalyst can be for a resumption of activity. I know the consumer is a little bit jaded, a little bit concerned after the huge domestic declines in residential. We've got the central bank, the Riksbank, who has pretty much done almost all of its work now, down to 1.75% on rate. I'm just wondering where the catalyst for growth is coming from, Jens.
Well, I think we're waiting to see that customers turn a bit more positive about the economy, and that's what we talked about recently. And when we look at our forecast, we are positive, and we think we can grow in that, and we can keep on having low costs and a good credit quality, so we can deliver a sustainable return on equity of at least 15%.
Jens, talk to us a little bit more about credit quality. It seems like this was a bright point in today's results. Credit impairments were net positive. How has the credit quality picture evolved?
Well, I think it's you got to remember that banks are in a different environment now, and that means that we have much more focus on making sure that we have collateralized lending, and we really have a strong and tough credit origination standards, and that means that we continue to deliver very low credit losses. This quarter, we even had clawbacks of that, meaning that the result turned very good.
And what is the outlook for asset quality, credit quality, heading into the end of this year and into 2026?
Well, we don't do these kinds of forecasts on how we see it, but I think the general tone is that, as I said before, that the Swedish economy is will do good, and the same thing will happen in Estonia, Latvia, and Lithuania.
In terms of those 4 home markets, we know that the pressures are on, Jens, to show more fiscal relaxation in order to, dare I say, amongst other things, build up the defence as well. And of course, we saw Prime Minister Kristersson talking to Mr. Zelensky yesterday in Sweden as well. Is there anything you're worried about? You talked about fiscally strong positions, but are you slightly concerned actually that the fiscal position of the governments in your key home regions is actually going to have a negative effect on the Swedish and other economies?
No. I'm not worried about that. I think if you look on the overall global picture, and the IMF talked about it, there are worries about weak public finances across the world. But I have the privilege, and we've chosen to have 4 home markets with strong public finances.
Jens, let me ask you about a couple of ongoing investigations. The U.S. SEC closed its investigation into the bank's historic disclosures of information without enforcement, so a welcome result, no doubt, for the bank earlier this summer. But you've still got a couple of ongoing investigations from U.S. authorities, including the Department of Justice, focused on potential money laundering violations. Any comment on the ongoing investigation?
No, I think that was a correct summary. It feels good. We've closed the investigation with the SEC. We still have 2 U.S. authorities looking into us. And when they will conclude and the result of that, I have no new information. They own the process.
Jens, I guess I'm looking further south, and I'm looking at governments thwarting M&A activity from Spain to Italy to Germany, and of course a lot of institutional reticence on that front as well. When you look at your markets and where you specifically have activities as well, do you think actually you have the right balance, or are you looking to grow inorganically, i.e. build up your presence via acquisitions?
Well, first, to say that we have 4 home markets, I've said a few times, and we are extremely proud to be in this, and no plans to go into any new home markets. Then we've done quite a lot of M&A activity during the quarter. We are in the process to buy a mortgage company that's focusing on digital solutions. We want to buy the other half of Entercard, which is a card company that we own together with SBAB. We've gone gone into a new investment bank together with Norwegian colleagues. So that means we have done a lot of activity. But we also want to grow organically, and we want to grow volumes, want to strengthen customer interactions while increasing efficiency.